Music intro. Oh,
Welcome back to Higher Exchanges. I'm your host, Jesse Redmond, Head of Investor Relations and Business Development at LEEF Brands. And I'm here with a guy who was just asking if we're going to have intro music, which I'm too tired from our earnings call to produce today, but we'll get back to that next week. Morgan Paxia, co-founder of Poseidon. What's going on, man?
Well, it was great to hear you guys on your quarterly call before this, and great to see the Bills pull off a major victory on Sunday. So doing good.
Yeah, we managed to beat the Lions, we being the Vikings. So that was a pleasant surprise for me.
Yeah, I saw that too. Congrats.
Thank you. Yeah, the investor call was a learning experience. Let's talk more about it, but let's bring in Micah Anderson. He's the CEO of LEEF Brands. Micah, what's happening?
Hey guys, how are you?
Good. Just chatting about the earnings call. A first for all of us. This is my first time working at a public company. When I was an analyst, I participated in a lot of earnings calls, but never set one up. And yeah, it was an educational process from learning the service providers out there to writing a script to recording that script and then doing the live call today. So it was exciting. Did you have any takeaways from first earnings call for you too? Right, Micah?
Yeah, it was the first one I've ever done. So no, I mean, you did most of the work, so congrats and thank you to you. So you made it easy on me. No, I remember the only thing I was thinking about before we got started, I think it was Jack Welch's book, Winning. He talks about like he apparently throws these like earnings calls and they're like just thousands of people, and he hosts them in like a live event, where people actually show up and they're like raging parties. We did not do that. That was not what ours was. So, but that's the goal.
Yeah, we'll get there. Yeah, I think it's been pretty light attendance. I was pleased with the participation that we had on our call, but I remember from being an analyst for some of the companies, they would get 20 or 30 people on the earnings calls, and sometimes companies don't have any formal analyst coverage, and we think it's a big deal when 4 or 5 analysts ask questions, whereas when you listen to an Apple or an Nvidia call, I don't know how many people cover those stocks, but probably 20 or 30. So I think that's one of the things that's exciting in cannabis is, if we were to get some reform and get some wind in our sails, to see that analyst coverage pick up and have a more vibrant investment community.
Yeah, definitely.
Well, Micah, I think this is your second time on the show, if I recall correctly, but I know new people always tune in. So before we kind of jump into the quarter, do you mind just telling a little bit of people a little bit about who you are and how you got into cannabis?
Yeah, sure. So my name is Micah Anderson. I'm the CEO of a company called LEEF Brands. We consider ourselves an extraction company at our core. We operate in California and New York. I founded the company, or at least LEEF Holdings, which then turned into LEEF Brands about 10 years ago. So it's been a long time, and I've been in the cannabis industry for basically my entire life, long before it was legal. Lived in Mendocino for a long period of time, find myself back down here in San Diego and bounce around all over looking at different projects that we have. We are now a cultivation company as of this year, which I'm sure we're going to talk about on the call. We run a large farm in Santa Barbara County. Extraction facility is headquartered up in Northern California in a little town called Willits, Mendocino County. And this year is our first time that we've ever expanded out of California. So we're now basically replicating the same business in New York, selling concentrate products to the same, in large part, the same group of clients that we're selling to in California. So that's me in a nutshell. Yeah.
Yeah, no, that's great context. And Micah, I joined the company in January of this year. I think I met you guys in 23. I started covering you as an analyst in 24 and then joined full-time in January. And I think part of the reason that I joined was to help tell the story of what the team was trying to accomplish this year. And when we set out in January, Micah, the company really had 2 big strategic goals for 2025. Can you talk about what those 2 things that we're trying to get done this year on the big scale were?
Yeah, so the 2 were to complete, licensing and build out of the ranch, Salisbury Canyon Ranch. It took us 5 years to do it, and we knew that this would be the final year in which we would have plants in the ground and become operational. So the goal was, let's execute, and let's just be successful in bringing in a harvest and not, fumble that at the 1 yard line. And I think so far so good. We've been successful in doing that. And the second one being to finally get out of California and go see if we can do what we do in another market. And that was a couple years went into that. And so it was kind of like two at the same time. Typically, I don't really like having two main things. It's better to have one, but I felt confident that we could execute on both. We had a really good team on both sides of the fence. So that was it. Really, we had planted 65 acres. We harvested in the spring, brought that in, and we're right now in the middle of harvesting again. Our second harvest for the fall. So get the
sorry.
Go ahead.
I was just going to say, yeah, I think Salisbury Canyon Ranch is a super interesting asset that we have. Like, just to reiterate that California footprint. So we have the state-of-the-art extraction lab in Willits, California, which is in Mendocino County. Not too far from me in Santa Barbara County, we have this property called Salisbury Canyon Ranch. And then we have one retail location, which is under MSA to Glass House. That's called the LEEF, and that's in Palm Desert, California. But before I turn it over shortly to Morgan to walk through some of the specifics around the quarter, because we're going to talk about Salisbury Canyon Ranch in that section. Do you mind, Micah, just elaborating a little bit on what that farm is and the role that it plays in our business?
Yeah, so when you're an extraction company the size that LEEF is now today, it requires, we need a lot of material to run through our facility. We purchase on an annual basis close to 200 acres worth of like raw cannabis material in some form, whether it's frozen for the hydrocarbon line, the solventless line, or dry material for our ethanol line for distillate production. The farm was meant to basically put a dent in the supply chain needs that the company has. And it's done that. So 65 acres this year, that's a dent. It's not the whole thing. We still maintain contractual agreements with other farms in the state of California, and those will be ongoing probably for the next few years. We acquired a ranch, basically 2,000 acres of a 3,000 acre ranch that butts up against the Los Padres National Forest on the northeast corner of Santa Barbara County. Old farming ranch. It had been dry farmed for organic wheat like 30, 40 years ago. Very like, when you're looking at ranches, there's this term that people use sometimes called a trophy ranch, which is essentially just saying like this is a special, unique setting, which it really is. So we're tucked way back. We don't have any other neighbors. The mountain range that surrounds the entire ranch is owned by us and controlled by us, which is great for pesticide mitigation. And our permit is 187 acres. We grew 65 acres this year. Plan is to scale into that over the coming years as needed, just based on supply and demand. We do maintain a 100-acre hemp cultivation permit on the farm as well. And the idea there is just like, let's just see what happens with the farm bill. Depending on what happens with the regulations, I think that it's important if you're in the cannabis industry right now and you're not paying attention to what's happening on the hemp side, like you should be, and you should have a plan depending on which way the regs go. And so that's kind of a step in us having a plan. So if it goes in favor of hemp, we'll activate it, and kind of, just it's the next field over. We have like an East Valley and then a West Valley for the cannabis. And if it doesn't, then we won't. So that's the ranch.
Well, great. Well, over to you, Morgan, to dig into the quarter a little bit.
Sure. Yeah, I remember when Jesse started previewing when all these things would start to happen, and it's just amazing how time goes by. I mean, Jesse, you're already almost on your first year at LEEF. It's crazy. But so for the quarter, it was nice to see, as you're mentioning, the farm starting to contribute, because top line, you're up 24% over Q4 or Q3 of 24 to 8.4 million. So obviously, starting to happen, but that was only a partial contribution because it just started to kick in, I think, as you mentioned, was it like August that started to be a contributor?
Yeah.
So, as you think about, when you get a full quarter under you, maybe trying to set the stage of what does this look like for like Q4 and beyond? Like, how should people be thinking about what's Leaf's, as you start to really get this throughput cooking? How do you think about it from a top line perspective?
From a top line perspective, I think that we gained a bit of market share, which I think led to the top line number. The bottom line, the impact of the farm, like you said, we really only ran, I think if you look at the total percentage of material that was ran through the facility in the quarter, it's about 30% came from the farm just through one extraction line. None of the material went through hydrocarbon or solventless. And it had a positive impact, the way that it did. So I think that as we move into Q4 and then even into 2026, and we start running more of the harvest from the fall, we'll then start to see that bottom line impact from both on the hydrocarbon and the solventless line. So higher margins coming out of the other half of our business. Total revenue, and I'm kind of focusing on California at the moment, but California is like half of our business comes from the ethanol line and the other half comes from hydrocarbon and solventless. And so I think that there's room for growth. There's definitely room for improvement as we go into Q4. I really think 2026 and the latter part of 26 is when we really start to shine. Even though obviously you can see it in the numbers, we damn near doubled our gross margins, which is great, but I do think that there's a ton of room for improvement. And then some of that came from New York as well. So some of that top line growth came from a bit of the revenue that we're starting to see from New York, which is a great thing too. And I think that I definitely see, especially in 26, I think that is going to continue to grow.
Do you, and it's a good point about, being outdoor, you get two crops. So a lot of this gets grown and then you run through it, right? Until the next, basically you want to make sure you have enough inventory to run through until the next spring initial harvest. I know you can also buy and you have contracts to buy as well, but is that the idea, is like to build up enough inventory so that you just can be just running going forward? And
you kind of nailed it. Like you need to have your production planning dialed in so that you're not like running out of material. So we feather in the material that we're still purchasing from other people throughout the state into the production planning, so that way we don't run out. The truth is though, is that like we won't be fully like a closed loop to where to where we're only running our material in probably the end of 26 and going into 27. It's going to take a bit of time. 65 acres, it's a lot of material, but it's not enough. We actually intentionally scaled back the size of our business too, just a little bit this year. We were running on average, and the ethanol line at one point we were running 50,000 pounds a month in that material, and we scaled back a bit just to make sure it's like, look, it's better to have high margins and to pick up the efficiencies that we're seeing out of this material than to just keep running high numbers with lower margins. So there's a bit of like ebb and flow strategy that we've been applying to what we are running and when.
Yeah, there's also a ton of volatility, Morgan, in distillate pricing. I don't know if you want to elaborate on that, Micah, but when we're thinking about revenue quarter over quarter, sometimes you could see revenue go up or down, 10% or more, not based on taking share or losing share, but just because pricing could be so volatile on distillate and other fractions, but especially on the distillate side.
Yeah, that's true. There's revenue ebbs and flows, and those typically are because of the amount of material that are on the market, just supply and demand. So leading into harvest, there's less material on the market. Prices are typically higher. Right before you get to harvest, the market kind of seizes a bit and stops buying, anticipating prices to fall. We see that every year. Q3, Q4 are typically our slowest month, or quarters rather, and then our best two quarters are usually Q1 and Q2. So we're looking at all the data that we have from past years and making some decisions on investing into inventory going into Q1 and Q2. So meaning, let's not sell through everything that we can sell through in these quarters. Let's stack inventory, put it aside, believing that we'll have a stronger Q1 and Q2 and be able to leverage some of the inventory we have.
Yeah, that's a great point, because like also just thinking about how you're managing things on the expense side, like operating expenses came in at 3.9 million. They were down 12% year over year,
Mhm.
which is obviously a good thing to see. And so how do you look at, your OpEx and thinking about it from like, you have this operating leverage, a positive operating leverage kicking in, right? I
Yeah.
mean, as we see with a lot of these other companies, they're feeling the opposite effect where they're trying to contain costs as things are coming down, but you guys are, like the inverse of most right now, where you're seeing more and more revenue coming through the system. So when you think about your OpEx at this point, do you still see more efficiencies you're trying to gain, or is this more trying to contain it and then just having more of that positive operating leverage contribution?
Yeah, it's a good question. I think that when I think of like, the difference between cutting muscle and cutting fat, I think that we had a little bit of fat, and then we've had periods of times over the history of the company where we've made decisions on like, we need to cut expenses. California, especially when you're only in California, it's been a steady decline for a long time, right? And so you're constantly having to evaluate like, where can I make cuts? How can I do this better, cheaper, faster? It's an ongoing exercise that we have. I definitely feel like Leaf is at a point right now that like we probably cut down to muscle, and if we were to cut further at the moment, like we would probably do more harm than good. And so I do think that we're going to need to invest a little bit into New York just as we scale capacity, put some more equipment over there. We're going to need to invest into salaries and wages and the OpEx to support that. So next year, where I think that there's a significant opportunity for us, though, is on harvesting and processing techniques. I think that we spend a lot on labor, pulling stuff out of the field, and it's like we were like sub $10 a pound, which is great. But like, I definitely think that there's ways that we can get that way down. I think just some by mechanizing a lot of what we were doing, so less people touching what was going on and using tractors and whatnot. So, but that's, a year down the road that we're going to see the impact of that. So to answer your question, I think that we're probably steady on what we're spending at the moment when it comes to operating the business. And, but I don't necessarily see like a big, gigantic increase that needs to happen.
How has it been managing labor in California? This has been a pretty unique year, especially for farming specifically, because it's been kind of in the spotlight. And how are you managing through that, right? I mean, we've lost a lot of farmers in this
Yeah.
state this year. I mean, there's been it's no secret, there's been a lot of ice raids, there's been a lot of activity. Being down here in San Diego, I'm sure you saw a lot of the activity. It was pretty
Yeah.
intense for a while, and it's kind of seems like it's going up and down the state. But just overall, how are you guys managing your labor?
Related to the farm, I mean, a lot of it's outsourced. We use a lot of FLC contractors that, yeah, they have been impacted when all the raids started going down. People were pretty freaked out. We're pretty isolated. We're on the northeast corner of Santa Barbara. Unfortunately, we haven't seen any of that in our area. Actual W-2 employees that we have on the farm is pretty minimal. I think we're like under five full-time employees. So, and all of it's contracted out. And so it's just, for us, how do we manage it? Make sure that you've got multiple relationships with FLCs. So if you can't pull, from one crew, you can get it from another crew. And then in Northern California, I mean, we're really lucky. We have a very good team of people. Mendocino, culturally, cannabis has been, accepted and going on there for so long. And as like the industry has gotten tougher and tougher and people have like wound down their own businesses, we've been able to recruit a lot of really talented people that at one point in time were running their own business. And so we've got a really good team and have been able to lean on the staff that we have to just get more and more efficient. So
Yeah,
that's it.
that's good to hear. Yeah, I know it's just been a tricky process, but also understanding, yeah, it's a good point about Willits. And we used to go up there quite often, and there used to be so much going on up there, and it was amazing. There was a lot of great cannabis coming out from up there, and people really caring and loving their craft. And yeah, I'm sure they have more turns than most people do anywhere else in this country, on a combined basis. So, yeah. So transitioning down to free cash flow, you guys squeaked out some positive cash flow, which is great.
Yeah.
You know, that J curve function is functioning there for you guys, which is I'm sure a sigh of relief that it's
Yeah,
starting to kick in.
it is a sigh of relief. So it's just like, okay, you know, you gotta. And I think it's replicable. I think that will be kind of the status, you know, that being the minimum on an ongoing basis. So. But it's not enough. I think, like, I don't want to hang our hat on it and say like, oh, we made it look, you know, it's just like we made a little bit of money. I think in cannabis, that's everyone gets kind of patted on the back for doing that because it is difficult to do. But I definitely see a path forward to where we can increase that number. So that's going to be, you know, our main focus.
Yeah. Yeah. No, that's great. I mean, that just helps a lot of things. From the balance sheet to just overhead to planning, capital allocation, all that good stuff.
Yeah.
I was just curious. I haven't seen the I haven't had a chance to dig in, but what do you guys do anything with are you current on 280E, or are you guys doing a UTP program, or how do you guys look at that?
Yeah, so you know we're accruing a 280E liability. So I think if you look at our balance sheet, you'd see that there's a large, you know, debt obligation. Alec, and so our thought is that rescheduling will happen at some point in time, and you know, us, like a lot of the other public companies, a lot of the other MSOs are taking the stance that when that happens, we will be able to negotiate, you know, on that number, or maybe the whole number goes away, and we'll see how retroactive they go with it. But for 2025, you know, hopefully Trump does something soon with it, and if that happens, then that figure would come off. So it's yeah, we're just kind of like looking at what a lot of the other companies are doing and replicating the same strategy.
Right. Yeah, no, it's definitely the commonplace. I'd say that's the norm versus the exception at this point. So yeah, I was just curious because it's a lot, right? To your point, I mean, and especially as the revenue comes up, right? That number just
yeah
more and more apparent. So
one of the unique challenges of our industry.
Yeah. Hopefully not for too much longer, but
yeah,
who knows? Who knows? All you can do is keep going, and at some point. Cool. The other thing so LEEF, you guys have now accumulated. I don't remember where it was. Jesse, you probably know, or Mike, you probably know offhand too. You're up to 4.58 Bitcoin as of the third quarter. Where were you guys in third quarter?
Roughly 3, weren't we, Jesse? Maybe
yeah, I think a bit more than that. Yeah.
Yeah, okay. 3.5 maybe.
Yeah, sort of chipping away.
Yeah, so it's just we put it out. You know, if you look at our invoices, and we send out weekly kind of blasters on our menu, and we always kind of advertise that we will take Bitcoin as a form of payment. We'll actually discount for Bitcoin, and you know, we have to be like, when you're only making, you know, a couple $100,000 for the quarter, right? Like you can't take it all on Bitcoin, otherwise you're going to be forced to sell your Bitcoin. So it's kind of a very slow way for us to accumulate some, and we are methodical in the way that we think like how much to take. It's just starting point for us. I think that the strategy will be proven right over time. I think that people misunderstand the Bitcoin treasury strategy and like our approach to it. I remember when we first started talking about it, people thought we were going to become like a Bitcoin company or start doing Bitcoin mining and get rid of the cannabis operations. It's really not that at all. It's for me, it's like, how do you in an environment where everyone's balance sheets are eroding and having a negative impact, how do you offset that? And I definitely see Bitcoin as being a way to do that, an uncorrelated way for just to put something on the balance sheet that I think goes up, call it 25-30% year over year, and over time ends up being something that's super valuable, super liquid. And for us, being a cannabis company, it's like building your own sovereign bank account. And what I mean by that is if LEEF can get itself into a position to where it has something meaningful beyond 5 coins, you know, 50 to 100 coins. If Bitcoin does what I believe it's going to do over the next decade, you know, on the other side of that, you have this you have north of $100 million worth of Bitcoin, of this highly liquid asset that you can start to leverage in a way to build your own business. You are no longer reliant on typical institutional ways of raising capital. And that's something that's like, it's unique. No one's done it yet before. And I definitely think that people don't understand it because it's new. And I definitely believe that in 5-10 years, people are going to look back. And I think that most public companies are going to have some sort of Bitcoin strategy within them. And if LEEF can be the first to get out in front of it, I think it'd be a good thing for our company, good thing for the shareholders, and time will tell.
I think I saw today that Jamie Dimon even now, or Sir Jamie Dimon, is now even recognizing that Bitcoin is something, right? For the longest time, he was holding out that he was not really sure, even though they've been very involved in the space, but more transaction basis. So interesting that even some of these folks that have been, and they're majorly involved in this country, are coming around. Regardless of, I'm not talking about anything about day-to-day market fluctuations, but just thought that was interesting as an asset class. Seeing that recognition is a pretty big deal. At least I thought so, because I think he's done a pretty good job building that bank into something significant through quite a few different cycles. But just kind of thinking about and understand that was very helpful. Like you were saying, like ideally trying to build the 50 to 100 coins over time, and managing it as the business is growing, and how you're trying to assess where to allocate the capital as you're trying to grow. So how do you try to balance that from like, hey, do we put this much more into New York, or are we going to start reserving some capital for maybe the next states? Like, how do you kind of assess that in the overall strategy?
Yeah, it's a good question. I look at it that, like, for us to have something meaningful, 50 to 100 coins, it's going to require some sort of a raise. Otherwise it's going to be a long time till you get to that number, right? At the rate that we're going. I think starting with something organic, something that we can do internal to get to where we're at now, 5, and maybe we get to 10 over time. And then I think once we get through, if we can clean up our balance sheet a bit over the next year or so, keep putting out good quarters, I think that opportunity is going to come. And I think that there'll be an accretive way to go do that. And so I think, to answer your question, I think what you're really asking is, like, do you put the money into New York and like grow that business, or do you put it into Bitcoin? And like, how do you make that decision? And I look at it like I think that there's a way to pair them together. I think that there's these unique opportunities where you need to go out and do a raise, and there's this like new unique way of raising capital that not too many people are super familiar with it. So meaning, like, I sell some equity and now it's collateralized by the Bitcoin. It's a way to give an investor protection that hasn't really been offered before. And so I say that all with also believing that, like, the goal is to keep growing the cannabis business, to keep kind of expanding the extraction company. So really it's like just an internal, like, management thought process of like, okay, if Bitcoin keeps going up at 30% year over year, that's kind of the hurdle rate that you're up against. And like, can this other money that we have do better than that? And if it does, then let's put that into the operating business. And if it can't, then maybe that's not the best use of capital. So that's kind of a couple of the ways that we've been thinking about it.
Yeah, that's fair. I mean, that's opportunity cost analysis, right? Is just trying to determine where it's most productive. So that's good. I'm happy to keep going on questions, Jesse, unless you want to take your section and I can come back, or.
Yeah, if you have one more, Morgan, that's cool.
Sure. So New York is moving along, which is, great. Congrats.
Thanks.
So as you're looking at, and as you mentioned on the call, so for folks that weren't on the call, you mentioned like exploring more states on kind of a cycle of 12 to 24 months. And I was just kind of curious, is looking now in your first new market outside of California, getting some reps in there, going to do some more there, keeping you pretty busy for 26. Do you think 26 is maybe when you'll start evaluating for other states, or are you already looking at other states? I'm just kind of curious what other markets that kind of fit your model.
We've already been looking at other states, not in the sense of that we're actively like about to make a move on them, but just more exploring them. I think that it comes down to like, do our clients, are they already there? Like, do we already have relationships in this new market? Does the new market allow for us to replicate the same business model? So does it allow for hydrocarbon extraction? Not all states do.
Mhm.
And then the big one, and this is kind of where I think a lot of the states kind of come off the list for us, is like, can you have a large outdoor footprint? Can we truly replicate what we have in California in this new market? And if the answer is no, then that's kind of like how we're deciding which ones look interesting. We've looked at New Jersey, we've looked at Missouri, we've looked at Ohio, but none of that. I don't believe any of that will happen in 26. I think that we're going to stay focused. We got a lot to execute on. We got some expansion in California that we need to execute on, and then we also need to do the same in New York. And that's plenty of work for us to do. There's definitely enough wood to chop. So, but I could see a situation where we get kind of into Q3, Q4 of next year, and we really start looking at another state to potentially move into.
Yeah, I think that's a good segue, Micah, because a lot of the conversations we have at our more strategic meetings are about how do we continue to build on this momentum. And with this quarter, we saw a partial contribution from the farm. We saw a partial contribution from New York. And so just to get a full quarter's contribution, we'll continue the momentum in the business. And then potentially with pricing accelerating into early next year, no guarantees. That's just kind of the California cycle. We could potentially see, further strength in the first couple of quarters of next year, just leveraging, the assets and the work that we've done. But I know, Micah, we also spent a lot of time talking about, where do we take it from here and what should the priorities be? And one of the conversations we have most often is about, Salisbury Canyon Ranch. And I think you set the stage well earlier, where you have this 1,900 acre ranch, 187 acre cannabis permits, 100-acre hemp permit, which is currently dormant. And so there's a lot of optionality, on those two sides of the business. And so when you're thinking down the road, Micah, if we had some money to spend on CapEx, how do you see the scaling on the cannabis side? And how do you evaluate how much to do and when? And then with that, the optionality on the hemp side as well. What are your thoughts on under what conditions it makes sense to flex one way or the other on that?
Yeah. I think that, we're constantly talking about just like a saturation rate in California, like take one state at a time. Like, have we hit a ceiling in California, or is there more business for us to go get? Is there other ways for us to improve both top line and bottom line in California? And I think that the answer is definitely yes. I think scaling into the farm makes a ton of sense. We purchase more material than we grow ourselves. So there's a real reason for us to do that. And then on the hemp side, a lot of it just comes down to like which ways the laws fall. I personally think that the idea of like entering the hemp side with some sort of a low dose product is pretty attractive, but I could also see a scenario where that all fizzles out if the laws go the other direction. Do they close that down, and then you spent a bunch of time and energy building a brand that then gets shut off? So it's like, and I'm sorry if I sound bipolar in what I'm saying, but that's the type of stuff that we've been talking about, is like, at what point do you pull the trigger? And so I think in order of priority for us, I think that like definitely investing into building out more in California makes a ton of sense. I think that you can see that in our numbers. Building out in New York makes a ton of sense. And as you get to a point to where you're like, we're hitting a ceiling, like there's not really more opportunity for us here in California, that's when I think then we start looking to these other states and go, okay, well then let's go plant a new flag somewhere else and have the ability to bring in more revenue and margin that way.
It's just jumping in real quick. Yeah, on the hemp stuff. I mean, we've all been in this, and Micah, you've been in this longer than any of us. But I feel like this is Groundhog Day. I feel like we talk about this hemp situation now for the last couple of years, and specifically this time of year, like it gets really intense. Of what do we do with it? Do we shut it down? Do we not? Do we regulate it? Do we not? Like, what do we do? And it's like creates all this noise and uncertainty, and then just kind of the status quo. And I honestly don't know how to read the situation either. You know, talking with folks, I don't think anybody does. I mean, if you just look at marijuana moment in the last couple weeks, one week alcohol is lobbying for, to your point, low dose beverage. Now this week alcohol is lobbying to do a temporary ban on everything until there is regulation in place. And so it's like and I was just reflecting on all of that, and I'm like, you know, man, we can't even get the cannabis industry like focused on one thing. And it's like it seems like alcohol is having a similar kind of issue of where they all stand and all their constituents stand on how to proceed forward with it. Regardless, it seems like it's deeply in their minds and how it's impacting other parts of the alcohol space. Man, I just saw Molson Coors numbers were off again as the beer slump continues. And I was also reading about Target and how Target in Minnesota, and how people are more inclined to go shop at Target now that they offer cannabis beverages or hemp beverages. And so it's just, you know, give you guys a lot of credit for trying to weed through that noise, because it is,
It's
feels like pressure cooker.
Yeah, it's hard. It's like, you know, I'd be lying if I said we're not looking at it. I've been to Champs. I've seen, you know, it's like you go to a cannabis, you know, event like that in California, and it's kind of a depressing setting. You go to Champs, everyone's partying, like having a great time. Seems like everyone's doing good. So it's easy to get shiny object syndrome and think like, oh, well, we got to get over there and do that. I feel like there's also I also think that like sometimes doing nothing is actually the best move. And I think for right now, I'm not saying you do nothing forever, but I think for us right now, in light of we have a great opportunity. There's plenty of room for more opportunity for us in California and New York. Let's just focus on that. Do nothing on the hemp side. At least get ourselves positioned well. Like we have a license, we have a hemp manufacturing license. They're both inactive, but they're just sitting there. And we have the skill set and the relationships to where I think that we could be successful if something changes and we do need to go that direction. I also think that like when I see what's happening with Target and these other, I think, what is it? Not Circle K,
Yep.
one of the
Yeah,
other.
Circle K in Florida, yeah.
Is it Circle K? Yeah.
Yep.
That's hope, in my opinion. You know, that's like that's signs that the total addressable market is this massive market, and the people that are on the regulated cannabis side are playing in this tiny little sliver. And so I'm hopeful that at some point in time, LEEF does get the opportunity to go participate in this other market. I mean, at the end of the day, we're an ingredient company. We sell ingredients, we sell cannabinoids. And so to have a broader audience to be able to sell those types of products to would be amazing for us. So, but I have no idea which way it's going to go. And I don't trust government to make the right decision or, either. So yeah, long-winded way of saying, let's see what happens with the laws, and then we'll make a move after that.
Speaking of having no idea, Micah, let's talk just quickly about federal reform. I think that's something that could your favorite topic. I say it in not so much looking for a prediction from you. I think we all are kind of in the same camp where obviously momentum is building, but obviously we all have no idea if it's going to happen, next week or before midterms, or at all. So not so much focus on the prediction, but more focus on the optionality, that movement on that side, on the optionality we have on the farm if we were to see movement on federal reform. And so I tend to think about LEEF as one of the companies that does have a call option on federal reform, kind of the way people think about Glasshouse, that we have this 1,900-acre ranch, we have this 187-acre cannabis permit, we have this state-of-the-art extraction facility, and in a world where federal reform started to accelerate and we got to rescheduling and then descheduling, that would be, a massive thing for our business. So I bring that up in the context, Micah, that when you're looking at federal reform and those CapEx decisions, which Morgan was talking about earlier, if we were to see faster movement there, and in that world, we wouldn't have just to focus on can we meet the demand in California, but how do you think about the farm and even scaling that permit further if we were to move towards descheduling and eventually interstate commerce opened up?
Yeah, if rescheduling and descheduling was to happen, LEEF is going to be in a great position, because of our footprint and our throughput. So I think that if descheduling was to happen, our big farm is going to become a small farm, quickly, and so we'll need to game plan for that, and that could come through M&A or that could come through strategic partnerships. But we've got a 187 acre permit. I think that there's probably a way for us to expand beyond that in the county that we're in. And I believe that California is definitely going to be the lowest cost producer when it comes to these types of products, no different than food, no different than wine. And so I think to have this farming asset, to have our extraction facility, we're definitely well positioned. My predictions on when it happens, I don't know. I'm rooting for it, of course. I hope that Trump actually does it. I'm actually more hopeful now than I think I have been in the past 3 or 4 years. I definitely didn't think Biden was going to do anything about it. So we'll see. I think rescheduling would be a great first step, and if descheduling happens, I think LEEF is going to be in a great position.
We'll get you out of here on this topic. Micah, let's dig into the future of New York a bit more. I think we're fortunate, it's not quite the right word, but I can't come up with a better one right now, that we did move into a market that I think is progressing really nicely. When I look at it, I see $1 billion in sales last year. I see over 1.5 billion this year, already at a $2 billion run rate. So I think next year will be over $2 billion in retail sales in New York. So you have a growing market. Another great thing about it, Mike, is that we have 55% of products made in New York use concentrates. So vapes are huge there. The discrete form factors like edibles are huge there. So a good market in terms of what we make. And then I think you mentioned earlier that we've been able to collaborate and sell a lot of our oil in New York to established brand partners we are already working with in California. So really great setup for us there. So I think the question gets to be not is there an opportunity, but what's the best way to scale into that opportunity? And right now, so far, Mike, I think we've taken more of a CapEx light approach, that we moved some of our equipment that we had grown out of in California out there. We have solventless live, that we're moving into hydrocarbon. So I like the fact that we're kind of doing the, crawl, walk, run approach out there. But if you're an investor, I could see looking at this and saying, wow, I want those guys to double down on New York. It seems like there's a great opportunity to scale revenue, also at really great margins. So how do you think about that as we head into 26? How do you think the New York business scales?
Yeah, I think we started off CapEx light, let's send out old equipment and let's just almost like a pop-up, let's test the market. Let's see if we can gain traction quickly. I think the answer has been yes. And so now it's like, okay, let's take the learnings that what we've learned in California and apply it to New York. And I definitely see us pushing harder on it, probably harder than I originally thought. So what does that mean? That means we're going to invest into putting more equipment into New York. We're looking at bringing on another facility that's larger and moving more equipment into that facility. And then bringing cultivation in-house, whether that's probably in the beginning, it's just going to be through supply agreements. But I think that, in a perfect world, I could definitely see LEEF owning 10 to 20 acres, hopefully, in short order over the coming years, to basically replicate what we're doing. Let's do large outdoor cultivation footprint to turn it all into concentrates and literally just rinse and repeat, do what we're doing in California.
Well, great. Well, I know we've had a long day, Micah. Appreciate you joining us. Anything we didn't talk about today you want to cover before we let you run?
No, I think that's it. We've been doing this all day, so
I know.
All good. Yeah, what do you got, Morgan?
One last one.
Yeah.
Is any symbolism to that axe behind your head?
Oh, that's what I was gonna spear myself with if the farm didn't work out. No, that came. A friend of mine bought it for me.
Nice.
And we did axes for employees at one point in time, and a couple of shareholders. We engraved LEEF on the side of them, and I kept one of them.
Cool.
What's behind you in the frame?
I have a 16-year-old daughter, so that's when the boys come over.
Any boys come over, yeah.
Yeah. Which
what do you have framed behind it? What do you have framed behind you? We can't totally see that one.
Oh, so let me kind of move this around. This one right there, that's the ranch. So
okay.
that mountain range, you see a bunch of mountains, then you can kind of see the field that kind of runs left to right. That's where our little operation is. So that's Santa Barbara. I collect old newspapers, so this one has to do with JFK. So original newspapers of events that, historical events that are interesting to me. And then this one right here is this one of a kind property in Humboldt that on the Lost Coast called Big Flat. And I surf quite a bit and am a pilot, and so you can fly into this very cool little hidden spot in Humboldt, and it's got to be one of the coolest places on earth. And that is a photo of me standing in front of the house. So yeah, moment in time.
Nice. All right, man. Appreciate it. Have a good rest of your day. Thanks for joining us.
Yeah, thanks, guys. Hopefully you guys didn't hear too much of that, but my daughter showed up, so I'm gonna jump. I'm not gonna stay for the rest of it, if that's okay.
Yeah, totally. Have a good one.
Okay, thanks, guys. I appreciate it.
All right, see you.
Yeah, later.
I was wondering if that was kids on yours. Oh, Micah, you didn't totally exit yourself out. Let me see if I can remove him.
Yeah. Close the computer.
Remove from stage. There we go. Okay, cool. Micah, you are out. Yeah, I heard some kids in the background. I figured that was his house and not yours, Morgan, unless you had some visitors.
Nope, no kids in this house.
Well, cool, man. You want to just take a couple minutes and touch on a couple of other quarters that came out, I guess, last week and today?
Yeah, we've had 2 so far. So we're well, 3 with including LEEF, obviously. But in the MSO camp, we've had Verano, and today just came out with Jushi. I guess I'd say, we had was it a month or 2 ago, we had Aaron on from Verano, just doing a catch up with him, and then seeing the quarter. And it's, as he was mentioning, trying to get some things more efficient, and that it would start to flow through. I think there were some aspects that were starting to kick in. It seems like there's still more on the come from some of their work there, because it seemed, just as I was asking Micah about operating leverage, some of these larger guys are dealing with that in reverse, right? Where it's like the price compression is really tough. The same store sale comps as a result is tough. And how do you get your OpEx underneath you faster than those headwinds are? So it seems like some of that is still working through the system. For example, the third quarter for them came in at 202.8 million, which was down 6.4% year over year. And as it looks right now, I mean, I know it's through 3 quarters at least, so it's a pretty good look at where they'll be for the year. But overall for the year, it seems like kind of similarish, down like 6.6% top line decline year over year. So so they're still kind of chopping through it. I also look at operating cash flow and impacts there, and so those metrics are still, seems like they're still troughing. We haven't maybe gotten all the way through that yet. So that was just, as you guys know, I like revenue and I like operating cash flow, I like free cash flow. I look at those kind of things, net margin, just because EBITDA is so messy and timing of things. And I like to look year over year, and I appreciate that you guys were doing that too, is talking year over year, because I think that's better than, it's good to track quarter over quarter as well. But I mean, there can just be a lot of noise in those, in that short term. So.
Yeah, when I look at these quarters, Morgan, I think back to a conversation with Nick couple quarters ago, Can Investments, and we were talking about how in the absence of no new states turning on, you're kind of battling price compression versus new stores opening. There's more variables to that. But when we have periods like this where there's no Florida, there's no Pennsylvania, there's no Virginia, what do we have, a partial in Connecticut and a partial in Minnesota for a couple operators? I think is what we had last quarter. So essentially nothing meaningful, and that's how you find yourself in a situation where margins continue to compress. 47% gross, 26% EBITDA, still not terrible. And to be totally frank, they're still percent or two higher than us on the gross margins. Hopefully we're heading in the right direction there. But so it's not like they're running a 20% gross margin business, but you're seeing that margin compression. At the same time, you're seeing a period where, year over year sales are down 6%, whereas, companies like us that are earlier in their growth, our sales were up about 24%. And so I think with these larger MSOs, that in these kind of almost in between quarters, for lack of a better term, Morgan, you can kind of evaluate the marginal moves that you're seeing in terms of how, for a long time, it was finding efficiencies, right? Year of the core with Cresco, then every year was year of the core for every operator. And in hindsight, that was completely the right decision to make, becoming more efficient. But overall, it feels like, just more broadly speaking, because I haven't dug super deep into the Verano quarter, but we're running a little bit out of those efficiencies, while at the same time, prices continue to come down as we fight the hemp wars and everything else that's going on out there. And so I just think for these companies, it's logically going to be a harder period until we see new states turn on. And, Verano, when we get, I don't remember their exact, PA presence, but, that's a big needle mover for them. And if, Florida were to somehow flip next year, it seems like those are the conditions or something changing the hemp channel that will kind of reinvigorate things more broadly across the space. But until then, it's just a matter of how well you can kind of manage and evolve in this pretty difficult environment right now.
Yeah, it's interesting. Like the idea of limited license was so attractive at the outset because it did mean higher prices. It kind of did frame the market, but then as you get capped out, if these operators don't have really strong brands that they can sell into via the wholesale channel into non-owned stores, then that gets trickier. And I'd say for like Jushi, actually, they did squeak out a gain. They were up 1.8% year over year top line. And they did notice or did make, several comments in their PR about, how much wholesale contributed to that. Because if you just, and certainly if you're states that your stores are getting competed with more stores saturating certain townships, if you don't have that ability to sell wholesale and still, be able to capture growth, it's tricky. And, we just have not seen these states evolve their programs where they do allow for more consolidation. And probably be smart if they would do that, if they, start to recognize the impact of not evolving and allowing for that. Because I think that would be, a really nice way for these companies to get more scale in an efficient way, and also give off ramps to these individual single store operators that would like to sell. Maybe they're getting pretty tired of this too, but if they can't, because people are, take Massachusetts for example. I mean, people don't want to go there because it's kind of like Hotel California, which I know you can say that about the entire industry, but because who are they going to sell to? And it's really hard to do that. So it was interesting that, Jushi's numbers, their operating cash flow was actually up pretty nice year over year. So it seems like they're kind of, I haven't seen the balance sheet updates yet, but just talking about, how they're actually operating the business. And maybe because they are a little bit smaller, they have a more that they can squeeze out of the markets that they are in. They're not fully saturated or tapped out, where some of these larger companies are. If they're already tapped out, they're already in every store that they can possibly sell into. Then what, right? And if they can't buy more stores or whatever, so it is an interesting calculus. And I don't know where these states, to your point, like, is Virginia going to come into the mix with this new governor race and give Hirsch has been covering this very well on the X. I have no idea where Pennsylvania is going to be, and it's just these other states are tricky to gauge any kind of timeline. Florida is a great example of who knows. I really think, as I've said before about, should President Trump do something around rescheduling, I think that does give a lot of states that have been holding back less of a reason to hold back. And I think that would be helpful for legal cannabis, but we got to see it.
Yeah, Juicy's margins are looking better. 46.7% this quarter, so in line with Verano. And you remember a couple of years ago, I don't remember exactly what Verano's margins were, but they were, I think, mid 50s or something, Morgan. They were the darling on the margin side for a while there. So interesting to see Juicy and Verano converge on the growth margin side, a little bit behind still on the EBITDA margins. Looks like 19.5% of the EBITDA margins. When I was at Water Tower Morgan, I wrote an initiation of coverage report on Jushi, so I got to know the business a little bit, and got to know Jim Trent in the crew. And one of the things that stands out to me about Jushi Morgan is the leverage they have to these adult use flips in Pennsylvania and Virginia. Numbers could be dated here, but I think it's 18 stores in Pennsylvania and 6 in Virginia. And if I recall correctly, they had a really nice cultivation facility that can scale more in Pennsylvania as well. So in terms of going back to those days, we used to talk about those words like torque to these different reforms, which I feel like we haven't used that word torque in a while because the torque has largely worked against us. But if you do think we're going to start to see some federal movement, but more importantly, for a story like Jushi, if you think we're going to see some state movement, and you look across PA and Virginia, 18 stores in one, 6 in the other, so that's 24 doors there. Plus, what the wholesale opportunities would be. It seems like that's a business that if you can get both of those going next year, could see some pretty good changes.
Yeah, I mean, to your point, it's a question of can they make it to actually benefit from it. And I know that's a pretty negative thing to say, but it's the truth. I mean, I saw this in the early days of some of these markets where they couldn't make it. There's plenty of operators that were ready to be there for when adult use turned on, and they just couldn't hang in there long enough. The medical market was too restrictive, and they just were not profitable, and just weren't around to see it. And then it was like the Gen 2s that came in that really got to benefit from it all. And that's just a tricky part of our industry is we are so regulatory driven. I don't remember your exact saying that you used to say, but it's true, and like you take here in California, for example, I mean, we're still talking about a state that is leaving 5 billion or so on the table because they just are, these cities that continue to stay opted out and think that there's not still cannabis in their communities, or they're smoking the wrong stuff. But it remains to be seen that California is pushing to expand access, retail access, so that the whole system could see more growth, see more tax revenue, and so yeah. But it is interesting, I talk, some of these states are like because we have these private companies, they are finding growth, and they're finding ways through this. So it just comes back to good product people want, pricing it right, having good retail, just basic business fundamentals. And I think because there's so many out there that are not in a position to be thinking like that because they are, taking a line from Micah, it was like they're cutting muscle because they're running out of options, and that's a tricky proposition.
Yeah, I like that. I like that saying. I like that saying that he had, cutting muscle versus cutting fat, because I think that is what it's getting down to. And I remember that now that with Jushi, they were trying to do a lot of operational improvements on the cultivation side, rejiggering the strains, the techniques that they were using to grow, and finding some efficiencies there. But they're also finding a lot of efficiencies at the dispensary level in terms of things like staffing. And I hear crazy stories, Morgan, at scale about how much is changing, how often you clean the dispensary. Like, does the cleaning service come every day? Does the cleaning service come 3 times a week? Does it come once a week? And if you do that across enough stores, you'd be surprised by how some of those small improvements can start to add up. But then where do you go once you start to run out of those more obvious things to do? I think is the condition we're getting into for a lot of these companies. Is there a quarter you're looking forward to in terms of seeing some of these other ones? Any of the big MSOs you particularly have your eye on, or anything smaller you're looking at?
I mean, looking forward to GTI just because they kind of set the standard. Were they positive growth year over year for the third quarter, or will they be closer to flat? I mean, analysts' projections, I think, still have them in a single digit positive. And I think that would be just everything we were talking about. If they're still finding growth at their size, there's some good work that they're doing. So I'm looking forward to that one, and see how that's going for them. I guess I am intrigued to see how Glass House is doing. Because of how they kind of set the table after the second quarter and what they had to work through, and to see how things are going. So Those are two that stand out. How about for you?
Yeah, I would say kind of same. Always interested in GTI just because they're kind of the blue chip leader. No conference call this quarter, but hopefully we'll get a press release out of them. So could check that out. So yeah, I always, like I said, a GTI is kind of a benchmark or a blue chip I always like to look at. And then Glasshouse, yeah, absolutely. We have a relationship with them through the MSA on the store in Palm Desert. And I always like Kyle and Graham and the team over there. So rooting for them as usual, but certainly some challenges there in terms of, on the production side and labor side. So curious to see how that will impact the quarter and how they'll be talking about that going into Q4. Then the last one, Morgan, just kind of looking at the other growth. I tend to think about Leaf, then think about who are the other growth stories out there. Glasshouse is one of them, and Grown Rogue is another one people commonly point out, which has had a couple more challenges over the last few quarters, but still curious to see how their expansion plan is rolling out, taking what they learned in Oregon and Michigan. See how they're doing with that in New Jersey, and then taking that to, Illinois and see what else those guys are up to. So I'd say, yeah, Grown Rogue is another one I'm kind of looking forward to seeing.
Yeah. Yeah. I mean, I suspect Glasshouse is going to be pretty decent because the guys were just on with Steve Eisman on his podcast. And I just listened to that this morning when I was at the gym, and I can't imagine they'd be out there doing those kind of things if, so I think just the tea leaves say it's probably gonna be pretty decent. So, but we'll see.
Yeah, they do a great job managing expectations and beating them. That's one thing, coming from the hedge fund investing world, similar to yourself, Morgan, is you look at companies who are able to manage analyst expectations and the investment community's expectations in general, where they're not too pessimistic or they're not guiding too low, but they do a good job. GTI, same category, where they set themselves up where they're having a good trajectory, but they leave enough room in there where they're able to usually beat it. And so, yeah, I think I'll be curious with Glasshouse to see if, after resetting expectations, last quarter, see if they're able to continue that pattern of exceeding, because I think they've done a good job at that. And with my newish role at Leaf, I start to think about that more. How do you tell your story in a candid manner where you want to be excited about the growth, but also set it up in a realistic manner so you're not disappointing people?
Right. Yeah. UPOD is a favorite acronym for sure for that very reason. Cause I think it's just, and especially like to your point for you guys, it's like, and I really appreciate Micah's thing of like, look, this was just one quarter. And that's right. I mean, it's, you got to get some successive sequential quarters building on that. And that really does change people's perceptions because, to show the trend.
Yeah.
So.
That's funny you said UPOD, Morgan. I know that's a widely used phrase, but in my sphere, you're the most common person, the one I hear using that most commonly. And my son started a business where he's selling fancy wheels that go on these e-bikes that the kids like. Oh. And so he has shipping times to deal with because he's shipping them from China to kids across the US primarily. And he was talking about shipping times. And I said, why don't you build a little extra cushion in that? Because we want a UPOD, Hudson. It's like, Dad, what does UPOD mean? I'm like, oh, let me tell you about my friend Morgan and his phrase, under promise, over deliver, Hudson. That's what we're going to do is we're going to tell them it's going to take an extra 10 days. They'll get there 5 days sooner, and they're going to look back and have a good feeling about that.
That's right. Delight them.
So that is my father's story. You're influencing my children in a positive way, Morgan. Well, cool, man. Been a long day over here. I know for you as well. Anything else you want to cover before we hang up here?
No, I think we're good. I mean, I'm trying to think of, do you know offhand who's next? Is there anyone coming out next week? I'm sorry, I didn't do that homework to know offhand. I'm sure there's some next week, but if you don't know, that's okay.
I don't know. I was going to cheat. Todd puts out a pretty good calendar on that, but I can't quickly get over to it. Yeah, I think on this, I want to say I think the 6th, there might be a wave of tier 1s coming in, but no, I don't have the calendar in front of me.
Okay. Oh, good. All right. Well, good. Well, we'll be watching and digesting.
All right. Well, as this fly buzzes around my head and I smack myself in the face, that means that it's time for the show to come to a close, everybody. So Morgan, appreciate you talking through that with Micah. It was fun to hear you guys have that conversation. I think you have a really good mind for this and asking questions. So appreciate you taking the time to have the chat with him. Thanks for everybody that listened to our earnings call today. If you want to check that out and you haven't listened, just check out my X profile or LinkedIn profile. You can find the details there. Thank you all for listening to the podcast. We know sometimes these are slower times in cannabis, so we appreciate your continued listenership. If you like video stuff, cruise on over to YouTube. We're trying to bump up our numbers over there, so you can subscribe and check out the video there. And we'll probably see you in about 2 weeks. We'll be back probably recapping earnings and seeing what else is going on in the world. So thanks again for listening. We'll talk to you guys again soon. The views expressed in this podcast are provided for informational purposes only. Nothing we said should be considered research nor a recommendation. All investing involves risks, including the loss of principal.